Welcome to the Real Estate Reel from Cohen & Steers. Tower REITs lease space to cell phone providers and other telecommunication users. When markets dropped in the wake of tariff announcements, towers dropped a modest 3.1% in the 4 trading days following the announcement. Through March, towers were up 16.4%. That's a stark reversal from the prior 3 years, each of which were negative for towers. And it's an especially significant departure from the end of 2024, when tower REITs lost 19.7% in the fourth quarter. Towers ended 2024 down 14.2% and were the third worst performing among REIT subsectors last year. We believe, however, the outlook is favorable from here, building on the first quarter's performance. 3 trends are driving that favorable outlook on tower REITs. First, towers are more sensitive to the interest rate environment than other real estate sectors, so their performance has suffered as the higher for longer rate environment has dragged on. As this chart shows, from January of 2022 to October of 2023, real rates rose by over 322 basis points, and tower REITs returned negative 43% over that time. However, since real rates have peaked in late 2023 and began falling, tower REITs have returned 23% through March of this year. We believe the rate environment will remain supportive of tower REITs, as the market is currently pricing in at least 4 rate cuts over the next year. The second tailwind for tower REITs, favorable supply and demand dynamics. After briefly pulling back on their 5G investments, cellular providers are again in the market for tower space. Users are demanding faster, more data-intensive applications like mobile video and gaming. A recent Ericsson mobility report shows estimated global mobile data traffic will double in the next 4 years. For context, mobile data usage has grown by 31% annually since 2015. Amid this growing demand, towers face supply constraints from restrictive zoning and public pushback surrounding new tower construction. Local communities across the country, from Brawley, California to Sagaponack, New York, have adopted a not-in-my-backyard opposition to new cell tower construction, fighting new construction of towers in their communities. Finally, we are focused on tower valuations. Since the end of 2019, tower REITs have, on average, traded a 1.8 times spread to broad REITs, as measured by price over funds available for distribution. At year-end last year, tower REITs premiums had turned into a 3.3 times discount to the broader REIT market. That's a historically large discount, as you can see in this chart. And we believe that the current valuation doesn't reflect the outsized growth opportunities that towers represent today. We believe the rate backdrop, favorable supply-demand tailwinds, and attractive relative valuations create a compelling case for tower REIT outperformance. Subscribe to the Real Estate Reel via the link on the screen and tune in next month to see what we're watching for next.